Well, Bitcoin finally reached its long-term target. We just came off a jobs report, which was but we got a hell of a reaction. Next week, we have CPI and 3 central banks that I'm following that are going to be meeting. My name is Blake Morrow, and you are listening to the Week Ahead video. We're going to talk about the equity markets. We're going to talk about this rip-roaring rally in cryptos. We're also going to talk about the currency market and all the events that could potentially move the market this next week, because we do have a big week as December is closing in, and so are the holidays. Market's going to get real volatile, really quick, and very thin as far as liquidity goes. So we're going to discuss all that. Anyway, I'm glad you're here. We're going to get right into it. And I really want to cover actually the things that are going to happen this next week. Because like I said, there are a lot of events that I believe that could move the market. What I should talk to you guys about really quick though, is I should talk to you guys about the dollar index really fast. And let's just pull up the dollar. I want to pull up a chart on Forex analytics. I'm going to do some real quick work for you just on this dollar index chart, and then we're going to go into the events that are moving this next week. Remember, this is a long video, a long-ish video. So if you need to just scroll through the bottom, it will be chaptered. If you're watching it sometime through maybe mid-weekend or so, you can scroll through and find the topics that you want to see. But I'm going to do a little bit of work with you, and we're going to go on from there. So, this is the dollar index, and you can see we had a very positive response after creating a little bit more jobs than the market was looking for. When we came in above 220,000, the market tends to react from the headline number, but they don't look at the fact that, and last month's revision was, I think, 20 some odd thousand more than expected jobs wise, but unemployment actually ticked up to 4.2%. But that's not as sexy as the headline number. And so looking at the headline number, the dollar bounced. But it bounced off of a pretty key level support. You just take a trend line, draw it across the previous highs here. Let me move that out of the way. You can see that we basically stopped at really critical trend line support. So what that really shows us today is the lows from today are going to be extremely important as far as the dollar goes. And if you want to look at it from a euro perspective, since the euro makes up so much of the dollar index, we're basically looking at 106.30. If we can break above 106.30, I think that's going to be a pretty bearish event for the dollar. But I just was meeting with Jim Welsh, and he was talking about some of the Elliott wave counts, and he believes that we might have a significant top developing in the dollar. But that's neither for here nor there. What we should be really focused on is today's lows in the dollar. That's going to be super duper important. Now, like I said, next week we have the inflation report. We have CPI, and if you want to follow along with all the events that are happening this next week, but I'm going to quickly just run through some of the currencies and some of the events that we're talking about. You can follow along right here on Forex Analytics, which is located on this tab over here to the right next to the Live Squawk and your risk management tools and everything else. But I'm gonna get myself off of here so you don't see me, and then we're gonna cruise through what's happening this next week. So next week, starting with Sunday, we're gonna have China CPI PPI. That's first thing Monday morning in China, but it's Sunday evening if you live in North America, or really late at night if you live in Europe. But that's going to be Sunday evening. Monday, we're going to have Mexican inflation. Now, I don't know if the Mexican data is really going to move the market all that much as far as the dollar Mexican peso goes. But what you're going to see is the dollar Mexican peso has been in this slow moving, ascending channel, and you can see it just in a very simple way. It looks just like this, right? It's just this rising channel that we've been in, and I wouldn't make too much about the Mexican inflation data. However, I must say that the dollar Mexican peso doesn't look great, meaning that the dollar versus the Mexican peso, you'd think it would be a little bit stronger with President Trump going to take office again in January. That's more of a downside risk for the peso, but I'll go into that a little bit later. Moving right along, Monday night, you have the RBA rate decision. Now, here's the thing about the Aussie. The Aussie got really just kind of hit this last week following the GDP numbers. That you can see the Aussie slumped right down to really critical levels of support down here. A lot of the market is expecting that the RBA might, even though they're not expected to cut this next week, they might actually be looking to cut in the meetings ahead. And that's got the market a little freaked out. And so the Aussie is trading weaker, but just remember, we're near a lot of critical support down here in the Aussie dollar. On Tuesday, we have Norway's inflation. Now, sometimes I'll look at the US dollar, Norwegian krona, and I do like to look at, and I actually really enjoy trading the US dollar, Norwegian krona. Let me see if I can find it here. I have my your currency pairs. You can actually adjust them and move them around, back and forth like this, however you like it. I have it a little bit lower in the 30 instruments that we cover. Between dollar index, crude, gold, Bitcoin. I just have the U.S. dollar, Norwegian krona a little bit lower. Anyway, one thing I want to mention about the U.S. dollar, Norwegian krona is we're really up against some what I would consider very key resistance up here at the 1120 level. Right at this level, we're nudging our head up against there. So if you are trading the U.S. dollar, Norwegian krona, any weak inflation data might be what is the catalyst that drives it higher. Now, we do have inflation from other countries, like on Wednesday morning, we have CPI from South Africa, all right, but we have US CPI on Wednesday. And obviously, I want to talk a little bit greater detail about the dollar index. I'll come back to the dollar a little bit later as far as the CPI goes. But matter of fact, let's discuss the dollar just a bit. And the reason why I wanted to discuss the dollar is because I showed you the importance of the trend line support. You can see it; it's in blue, the one we were just discussing. All right, but also what you're going to notice is this last leg of the rally, the 127% extension was hit today and held. That was just around that 105.50 level. Also, this is about the 50% retracement. But notice what the dollar index is doing. The dollar index is backing up to the broken underside of this broken trend line. So, CPI has been moderating, and inflation is slowly making its way towards the Fed's target. But the jury's out right now whether we're going to see an increase in inflation, and plus, with some of the policies that President-elect Trump will be looking to push forward with, a lot of people think that might be an inflationary. So you're seeing the dollar kind of bid on the heels of that. However, I don't know if that inflation data this next week is really going to move the needle as far as what the Fed is going to do next week. Not next week, in a week and a half from the time that I'm filming. So anyway, watch inflation. Inflation CPI on Wednesday is going to be a big deal in my opinion. We also have on Wednesday we're going to have the Bank of Canada rate decision. Yeah, you guys have to excuse me. It is Friday. It's late in the day, and it has been a hell of a day of trading. So the Bank of Canada, we've got this dollar CAD that just ripped higher today, and that is one of the reasons why the dollar CAD it's so funny. The market was not looking at the unemployment rate in the U.S. today that it ticked up, but the unemployment rate ticked a lot higher in Canada, even though Canada had a better jobs report as far as the headline number goes. Well, the Canadian currency got absolutely wrecked, and I think a lot of that had to do with actually crude oil weakening, which we'll talk in a bit. But you can see the dollar CAD is screaming back up towards that 141.80 to 142 level. Some big resistance there, especially for those of you that are following along on the dollar CAD. It's holding some very, very critical support as far as trendline support goes. We have to get all the way back below 140 before the dollar CAD turns bearish. But just keep in mind that 141.80 to 142 level is going to be really key resistance in the dollar CAD as we're moving forward. Now, moving right along, and by the way, the Bank of Canada is expected to cut rates by 50 basis points. Maybe one of the other reasons why the Canadian currency is so weak. On Wednesday, we're going to have 10-year note auctions. So we should really quick just go into yields because I think the yield story is kind of one of the things that is driving the market right now. And what we see is yields continue to move lower, and that's keeping the dollar under pressure. Yes, the dollar has bounced back today following the jobs report. Yes, it is jobs report related. But if you look at 10-year yield, it's actually closing in on the 161% extension. Let me get rid of this. 161% extension of the previous move. Now, what that translates to in the 10-year, and this is the 10-year notes. Remember, we have a 10-year note auction on Wednesday. We're at the 38% retracement. We're basically at the bear flag pattern breakdown point. And even though I tend to talk about notes here on the week ahead video, we talk about them literally on a daily basis in our free shows that we do. But you'll notice we're above the 50 DMA. And now, because we're above the 50 DMA and we're at the 38% retracement, there is a risk that we could continue higher in the bond market or in the notes market. And if that happens, 10-year yields drop. If 10-year yields drop, the dollar tends to come under pressure. That's something that if you're playing the dollar on the long side, that means you're shorting euros, you're shorting sterling, whatever you're doing, and you're playing the dollar on the long side. If the bond market or the notes market actually rallies, then yields are coming down. That should have a negative effect on the dollar. And it's tempting today when you look at the price action of the euro, which I'll go into in a little bit greater detail in just about a second. Because as you move along, on Wednesday night, we have the Aussie employment data. Then on Thursday, we have the Swiss National Bank rate decision. Now, look at the dollar Swiss. I'm going to just take you over to the dollar Swiss before I take you over to the euro because we have the ECB the same day. If you look at the dollar Swiss, we are in a head and shoulder pattern. Now, a head and shoulder pattern is a bearish reversal pattern. Where would we see a bearish reversal pattern? After a long rally. So yes, you have shoulder, head, shoulder. So that means the completion level for the dollar Swiss is all the way down towards this level at 86.20. Now, one of the things about the Swiss National Bank and the new bank governor Schlegel there, did I pronounce his name correctly? I think I did. Anyway, he could talk about the weakness, or excuse me, the recent strength of the Swiss franc that we've seen. Like overall, look at the Euro Swiss. The Euro Swiss is a good catalyst to see where Euro Swiss strength has come from. Swiss strength has come from. But if he fails to mention that and talk about the Swiss franc strength, then what we could see is that dollar Swiss slip below the 50 DMA and complete this head and shoulder pattern lower. Now, I told you I was going to mention the ECB because, well, the ECB is meeting actually on Thursday. And, the market is expecting the European Central Bank to cut rates. But if you look at the pattern, and it's been a while, I forgot to tell you guys, I haven't seen you in like 2 weeks, right, on the week ahead video. I want to thank Greg Horvat for covering the week ahead video last week. Well, I guess you did see me. I did a short clip. But if you look at the euro dollar, technically, this move on the French no confidence vote, the first announcement we got, you can see we got a big reversal, and the euro itself is setting up an inverted head and shoulder pattern. Now, again, the market is expecting the ECB to cut rates, but how dovish is the ECB going to be, especially if the ECB is dealing with inflation? Now, most traders and investors feel that the ECB is going to continue to be quite dovish, and that should keep the euro pressured. And like we've talked about a lot, especially on our free shows over the last week and a half, you've thrown so much bad news at the Eurozone between the French and German political nightmares, the Eurozone manufacturing, just horrible numbers, Eurozone growth prospects, disinflationary data, but the euro still stays relatively bid. And that's scary because if you throw a bunch of bad news at something and it doesn't go down, then anybody who's short is going to start to get nervous. So watch the euro, especially if we start getting back above the 106 level. I'm going to put this like right here. That's because then we're going to start to see a big inverted head and shoulder pattern take place in the euro. Yes, the euro is down today. Yes, it's come under some pressure, but in the grand scheme of things, if you look at the last 2 weeks, since the plunge to 103.30s. We've seen a really big reversal, and the euro's holding up relatively well despite all of this bad news. So remember, we have the ECB rate decision on Thursday. On Friday, or excuse me, also on Thursday, we have US PPI, and we have a 30-year auction on Thursday as well. Thursday night, we have Japanese industrial production and tan can manufacturing index. Now, I'm gonna say this, and you know, for so many years, Japanese data didn't matter. Why? Well, it's because rates have been pegged to zero and negative interest rates for how many years? I mean, since 2012, 10, something. You know, you have to go back and look. But now that rates are starting to potentially rise, well, they are rising and potentially could rise some more, economic data in Japan is going to start to matter more than it has in the past. So keep in mind on Thursday night, there's going to be some data. You know, one of the things that we noticed about the USD Japanese yen, and I believe we will talk about it when we review last week's or 2 weeks ago trade setups. What you're going to notice is the USD Japanese yen is holding below the 50 DMA and the 200 DMA too. So, you know, a little bit of a bearish outlook here as far as the USD Japanese yen goes. It is, you know, holding on the Ichimoku cloud right across the top of the cloud. So if it really starts to break below cloud support, especially, you know, a lot of Japanese trade the yen. They obviously pay very close attention to what's happening with the Ichimoku cloud. If you start breaking below that, so that means you start breaking below 148 and then below like 146.50, that is going to be a really negative event for the USD Japanese yen. That's not something that's going to happen today. Shouldn't even happen tomorrow, but it could happen by the end of the year, especially once we get end of year flows coming into the market. All right, continuing on Friday, we have the UK GDP. And one thing about sterling, and I want to point out this, maybe because I drew this 2 weeks ago, what we did is we stopped for 2 days underneath the underside of that trend line, but then we broke out to the upside. And if you are in the Forex analytics community, you would know, if you're in the trades room, you would know that I'm long sterling at 126.50. You can see that's my position right there. I keep a running open screenshots and screen grabs of my open positions, so you know what trades I'm in. Now, if you want to follow along in the trades room, you can. This is in the Forex analytics community. Now, remember, to be involved in the Forex analytics community, all you have to do is take a $1 trial. It's $1 for 10 days. Jump in the chat room. Come talk with me. Come talk with other traders that are posting in the trades room. Come talk with us in the general chat room. If you want access to me or any one of our other analysts at Forex Analytics, this is where you can access them. And then you can talk to other traders and have conversations like what Omar wrote here, where he was asking about the 10-year note yield breaking down and household survey and have a conversation about those types of topics. So join Forex Analytics, $1 for 10 days. You'll get into this platform that has a lot of different tools: analysis, basic technical analysis, harmonic analysis, Elliott wave analysis, and macro candlestick analysis, live squawk feed, risk management tools. We cover 30 different instruments, and not just currencies. We cover the DAX, we cover the S&P, we cover boons, we cover 10-year notes, we cover Bitcoin, we cover the dollar index, we cover a lot of different things. So there's 30 different instruments that are updated throughout the course of the week all the time. So make sure you check us out. And then you get, like I said, you get some cool tools like here's the data flash that is kind of like Bloomberg. When data comes out, it comes out instantaneously right here. So you can post that and put that anywhere on your screen. So check out Forex Analytics. Come chat with us about these different setups. Now, and yes, I am long the pound dollar, And what you're going to notice with the pound is that we have an inverted head and shoulder pattern that is already starting to play. A couple other things that are really important about the pound, just want to highlight for you. So you can see the pound dollar is already trying to play out there. We have broken, let me draw this out for you. We are breaking or trying to break a descending channel currently that has been in development in the pound dollar. So that bullish impetus that you're seeing right there, we get above that 200 DMA. Remember, we have UK GDP, and if you guys didn't see, the Australian GDP really moved the market this week. And can the UK GDP do the same? I think it can. So watch that GDP number on Friday of this next week. All right, I'm going to actually start talking about some of the other markets. We do not have Nick from Trading Analytics here, but if you don't follow Nick, on Twitter or his YouTube channel, you can click down below and follow him on Twitter. He posts a lot of great charts. He had a surgery, minor knee surgery this week and a half ago. So he's been busy going to and from the hospital and dealing with that. But don't worry, he's in good shape. The problem is that he's not going to be here to film his piece before I could get out this one. So I'm going to cover a lot of different markets for you. So let's go through some of those different markets that I want to talk about. So let's start with gold. And 2 weeks ago, when we were talking about gold, we're talking about it being, kind of in this, fade, or does it fade or does it bounce? Well, gold hasn't done a whole lot. It hasn't done a whole lot recently. Now, I want to show you something that I think is fairly important. Let's get rid of this fib level here. You can see that rising channel. That's obvious. But if you take this low to this high, you'll notice that the 618 retracement comes in right here at 2605. I think I have it at 2603 here, but it's about 26. Well, there it's 8. I think it's 2605. If you go right to the highs and lows, I can magnetize that to do it, but I'm just going to leave it like that. Anyway, you can see it as a 618 retracement. That is holding, and that's pretty key support right now. So I would say between here being support and this being the 50 DMA, you can see that there is a breakout looming in gold. A lot of people are going to ask, and I'm sure you're thinking the same thing. Well, is it going to break to the upside or is it going to break to the downside? I mean, we are in an ascending channel and we're in a pretty strong uptrend. So my bias would actually lean more to the upside to the downside. But I think it's going to be data related, especially with the inflation data that's coming up at the end as we come into this next week. Moving right along, copper. We talked about copper being at big support, and guess what? It's holding that big support. You can see how it's been holding for the last 2 weeks. Really, really strong support. We're now right in the middle of the range, held the 88% retracement. I don't have much to say about copper other than it is holding support, where you have currencies like the Aussie dollar that is extremely weak, which I don't necessarily think should be. But anyway, that's for our live shows, so make sure you check out our live shows, and I'll give you more analysis on the Aussie. All right, moving right along, crude. 2 weeks ago, we talked about how heavy crude looked. My notes say that it may break down, and I'm going to say right now, it looks like it will break down. Now, I say that because if you look closer here, this is the CL crude contract, and we're going to get rid of these arrows, even though I do think that's why it was highlighted bigger, that I was looking for a downside break. One of the things that you're going to notice about crude oil is we were actually forming a triangle up until today. So now we've broken through that triangle support. Now the risk is if we start breaking through, some of the, mid 60 level, 66, 65, that's going to be a pretty bearish event for crude. So watch that, and you could see it in the Canadian and the Norwegian krona. Both of those currencies are weak, and it's hard to put your finger on the nose if it's is it crude related or is it data related, because we just came off the Canadian jobs report. But any which way you slice it, crude oil, as you see right over here, looks fairly weak. All right, moving right along. We talked about the bond market, or we talked about we talked about the 10-year, and I do want to spend a little bit of time talking about the S&P and also Bitcoin and other cryptocurrencies as well. So let's take a look at the S&P really quick. Oh, actually, I'm going to take a look at a couple of indices, just go through them with you. Now, what you'll notice is we talked about a couple of weeks ago about the S&P breaking out to the upside and challenging this channel resistance. Well, we are, and we talked about relative strength being divergent, right? It is, and we are right up against there, but you can see there's a little bit further to go before we hit this resistance. But before you just start shorting the market, whenever you get into this type of resistance level, and you can see the characteristics of this chart. And I've had this conversation with you guys about 6 months ago, right? About 6 months ago, we were right about here, right about these levels. I started talking about, what happens if we have a blow off top. Well, whenever you're at the top of a channel like you see here, you have to start putting that in your head. Now, as my colleague Steve Valgaris, who does all the analysis on Forex analytics over the weekend, as he pointed out this week, still the probabilities are very low that we get a blow off top. If you expect a blow off top or a capitulation, a crash in the market, you're expecting something that only happens very few percentage points of the time. You're talking maybe 1 or 2 or 0.5% of the time you're going to get something like that. But the risks at this moment are enhanced because you can see that the trajectory of the stock market is accelerating to the upside. One of the big risks that I see right now, and I did do a video short on this earlier this week if you follow me via Twitter, one of the things that is at risk now is at the end of the year, the S&P is up about 30%. And if you're an asset manager and you're not keeping up with the benchmark index of the S&P, you probably are going to start chasing the market higher as a result. And if that truly is the case, we could actually see an explosion higher in the markets when liquidity starts to dry up, especially following the inflation data. If inflation is benign, and if you have a Fed that continues to cut rates and they kick the door open for more rate cuts in 2025, then you start thinking, okay, the Fed's staying easy. We don't have any problems with data. We have President-elect Trump coming back into office at the beginning of January. Well, if you can't beat him, you might as well join him and just start buying stocks. And that could be the trend that develops at the end of the year. And that's why we have to be a little bit careful before, if you're looking at this resistance saying, okay, I believe stocks are going to roll over up here, think about what I just said and think about, the data and central bank landmines that we have to navigate through over the course of the next couple weeks. But one of the things that you're guaranteed to get is you're guaranteed to get volatility. And one of the best ways to take advantage of volatility is taking advantage of the trader funding program. So if you don't know about the trader funding program and you don't know how you can access larger amounts of capital without putting your own capital at risk minus the assessment fee, that's your only risk, and you think you can make 10% without losing more than 6% with an unlimited amount of time, and your 6% risk is 6% of your high water mark as you're trading. So if you think you can make 10% before you lose 6%, and you have unlimited time to do it, check out the trader funding program. It might be the program for you. And plus you can be involved in the Forex analytics community when you're doing this, because we want you involved in our community while you're going through the assessment process, so you have trade ideas, so you have support, you have people to talk to, you have me to lean on, or other traders to lean on. Anyway, check out the trader funding program. I think it's a wonderful program that's worked out great for so many traders over so many years. All right, because we've been doing this now for about 3 years. All right, let's continue on. We talked about the S&P, but what about crypto? What about Bitcoin? Bitcoin has finally reached, and if you've been listening to these shows for forever, the week ahead video, our target has been 103,000. It's been the cup and handle target, 161% extension. We've been looking for a move up to 103,000 for a long time. Well, we finally hit it. So the question is, are we going to go higher? And look, I believe at least between now and the time that President Trump takes office and probably his first term or first quarter of 2025, the risks are still for a higher Bitcoin price and higher crypto prices, because you have an administration that is crypto friendly, but also you have extreme sentiment, and that's the other risk. And 100,000 is a big number. I mean, we're trading above it right now. We're at 101,500. And actually, if you didn't watch, Bitcoin just took off just over the course of the last couple hours on a Friday afternoon. But I believe that you're going to start to see two-way price action here. That means that, yeah, we get above 103, 104,000, 105, 110, you're probably going to get sellers. You get dips back below 90,000, or let's say 95,000, you're going to start to find buyers like you did last time around. I think there's going to be what we call two-way price action. And if you are bullish crypto, then it probably makes sense to sell up at these levels and buy down in the 90,000 level. Like I said, do I think it's eventually going higher? Yes, I do, at least near term. And you can see that not only in Bitcoin, but you can see it in Ethereum. You can see it in, let's say, Cardano. Let's do. I mean, you could do that with. I'll do it on crypto.com. You can see, XRP, Ripple. You can see Ripple is just ripping, right? Very, very strong moves there. Very impulsive moves. So I have to imagine with moves as strong as you're seeing, these are going to be bought on dips. Does it mean they're going to continue to move up at 100% a week? Probably not, but you're going to probably find buyers on dips now because this was such an impulsive move in cryptos. All right, so I wanted to make sure I went through that. All right, last I'm going to go through with you. This is the time in the video where I like to go over the 3 trade setups from 2 weeks ago, and I'll give you my 3 trade setups for this week. So number 1. From 2 weeks ago. Sell US dollar Japanese yen short above 157. So let's go US dollar Japanese yen above 157. This is 2 weeks ago. So we are up here. And I don't think it ever got back above 157. I was looking for a move above 157, closer to 157.20. I was hoping we'd break out of this. That's what was happening. I was hoping we'd break out of this higher and then move lower. But unfortunately, we just went straight down. So did this trade take place? It did not. So one of them didn't even take place. Number 2. If Bitcoin peaks above 100,000, because we've been talking about 103,000, short Ethereum below 3,000. Well, that didn't happen. As Bitcoin reached above 100,000, Ethereum continued to rally as well. Now, do I think Ethereum is going to be a decent short at some point? I actually do, but that trade never happened and never came to fruition, so we scratched that one too. All right, 3rd trade setup from a week and a half ago. Short New Zealand yen, daily close below 90. Oh boy, did that work. And I had an aggressive short on the New Zealand yen. And yep, it worked like a charm. I actually closed out my my New Zealand yen at 80. And somebody from my chat room could probably correct me if I said this incorrectly. I closed it at 87.80 or 87.85, and I was pretty aggressive being short because this was a range extension right out of here, and the range extension took us to the 50% retracement. So it was just like this, right? And so I knew we were going to be probably starting to find some buyers below 88 yen. So I think I was saying 87 cents. I meant 88 yen. Anyway, I closed it at 87.86 or 5 or something like that. But man, it was one of my better trades this year. That I was waiting for that one, and Sometimes you have to wait patiently, and then they come to fruition. All right, so that was number three. So 2 of them never even happened. 1 of them worked, so not bad. All right, here are my 3 trade setups for this week. So first one, Kiwi. Buy the New Zealand dollar above channel resistance. Now, if you don't know where channel resistance is, I'm going to draw it out for you. Channel resistance looks like this. Actually, we're going to go to a 4-hour chart. That's going to be a little easier to do. So basically, if the Kiwi breaks above channel resistance, which is roughly about, I guess, 58.80 at this point, it's going to be descending every single day because it's a descending trend line, descending channel. So if you get above this channel resistance, it's going to be pretty bullish. I'm just going to go ahead and put an alert on there, so we know when that happens. All right, that's trade setup number 1. Trade setup number 2: short dollar Mexican peso below 1980, which is channel support. Okay, well, I don't have this drawn as a channel, so I'm going to draw it for you right now. And you know, one of the reasons why the dollar Mexican peso, I'm kind of attracted to it right now, is because oh, that's not the channel I'm looking at. I'm looking at this one. Is because I think that the Trump administration is going to end up working with Mexico a lot more closely regarding immigration, fighting drug cartels, and I believe that Mexico is probably going to be able to avoid a lot of the tariff threats and risks as the Trump administration works with Mexico, which is going to be good for Mexico overall. One of the things about the dollar Mexican peso is its climb has been nice and steady since the election. But if we get below 1980, actually I should probably say 1990 support, 1985 would be right there, or that's 1980 right there. So we start getting below channel support, that's when it gets bearish. And I am looking for an eventual breakdown of the US dollar Mexican peso. Does that happen today? No. Will it happen next week? Maybe, if we get lucky. So that's trade setup number 2. Trade setup number 3 is the buy the euro dollar on a daily close above 106. Now, you guys know this is the inverted head and shoulder pattern. What I'm looking for is a daily close above the 106 level, which we're definitely not going to get today. It's Friday and it's afternoon, and you can see the euro's trading quite heavy at this point. But if we can make it above the 106 level on a closing basis, I think that the euro trades closer to 107 to 108 as we go into year end. So guys and gals, those are going to be my 3 trade setups of the week. Next week, don't worry, Nick will be here with Trading Analytics. And if you guys like this video or you like these videos and you think they're going to be very beneficial to you, there's a couple free things you can do, free. You can jump in the comments below and let me know if there's anything that I might have missed, or you want to say hello, you want to say thank you. I love those. So I'll see you in the comments section. Subscribe to the channel. It's free to subscribe to the channel so you don't miss any of these videos that I do each and every week for the last 8 years. So you can do that. And also, you can give me a thumbs up if you really appreciated this. And really, the thumbs up is for the team who's making sure that you get to watch this video each and every weekend, you know, through all the different social media outlets. And if you see us on Twitter trying to promote this video, do me a favor. It's also free. Retweet it, like it, share it with your trader friends, family, and I would greatly appreciate that, because I don't ask a lot from you guys. So that would be it. Anyway, I hope you had a wonderful Thanksgiving weekend. Once again, thanks again to Greg Horvat for covering for me last week. Thank you guys for hanging in there, and to the end of this video. I'll see you guys on the F.A.C.E show on Monday morning. My name is Blake Morrow with Forex Analytics. I'm out. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.